All right, what's going on, everybody? Welcome back. It's your boy CryptoWolf again here, and I am about to kick off a new kind of video series here called Story Time. And the goal here is to try to just tell some interesting stories specifically related to trading, whether it be some like gigantic wins, awesome trades, or some absolutely horrific losses. And just to get started with that one, let me say it's actually fairly tough to find some like good stories. I mean, it's easy to get like people's life stories and success stories and things like that, but to actually get like a specific like one big trade or even like a culmination of like small time frame and get an idea of like what was going through their head, what was the environment like, what was the market doing, it's kind of tough. But in the course of searching, I did come across this one, and it's kind of interesting. The story itself isn't terribly long, but he gets into a lot of very important fundamentals and things like that. So without further ado, let's get into it. Real quick, we on the Bitcoin chart. We're going sideways coming into the weekend. Not too much going on. We'll come back to the chart here in a minute, but this is how to make and lose $2 million day trading, the system, and the story. And just to give you a quick little intro here, a quote that somebody had said about this particular little article here. It's different than most I have read because there is no bullshit to try and look past, and all of your readers appreciate that. Got a fellow wolf over here, my counterpart, the Wolf of Wall Street. What's up from the Wolf of Crypto Street over here? Yeah, I'm sticking to it. All right, a kind of introduction to day trading. You probably don't need much of one, but it kind of intros to the story. This is about the lessons I learned while trading, the pitfalls people fall into, and the ways people destroy themselves. There's also the time I raised money for a hedge fund, then my partner turned $30,000 into $2 million in 3 months. But it only took him 2 months to turn that 2 million into virtually zero. Get into the details later. Traders are unique in that they might be the only group of people more delusional than entrepreneurs. I say this lovingly. According to my calculations, there's no reason I couldn't have made $1 billion day trading. Never mind that 99% of traders are losers. Not personally, but trading. Forget the fact that 80% of traders are depressed middle-aged men going through their midlife crisis. I was the exception. I was going to get my $1 billion payday before my 30th birthday. And I actually was the exception. I made a nice chunk of money before stopping. I treated the thing with respect, not some get-rich-quick scheme. It breaks my heart when I see people tell me they day trade and then see them following some bullshit newsletter or some coach with a fudged track record. When I see someone watching another Forex algorithm sales pitch or drooling over some penny stock report, I just want to shake them and say, you have potential. Stop letting yourself get scammed. Stop scamming yourself. All right, so if you trade without the proper preparation, you'd be better off in Vegas. This is not an exaggeration. Not only are there free drinks, sexy ladies looking for fun, and an obscene selection of Cirque du Soleil shows, your odds at pretty much any casino table are better than the markets. I mean this literally, like literally is defined by the dictionary. You are guaranteed to lose money over any decent period of time unless you learn to trade well. And then even once you've prepared and you feel you know everything there is to know about the markets, you're still not guaranteed to win. That's just the nature of the beast. That's why I started meditating at 16. Trading is intense. In college, I would make $5,000 in the middle of class and then lose $10K a few hours later while watching a movie. Yeah, I get that one. That kind of thing gives you a different perspective on money. One last thing before we get into the meat of the post. Like he said, this is probably different than anything else you've read on trading. Why? One, I don't want to sell you anything. I don't give a shit if you trade or not. Actually, I would almost rather prefer you didn't. I'm not currently trading. I've double checked my methods and they still work, so the information is current. 3, the focus isn't on the method, although I'll give you all the dirty details. You've got to be fluid as a trader. The top hedge funds in the world hire mathematicians, physicists, meteorologists. They are constantly shifting algorithms. How do you compete with these people? Well, you don't. And this will make more sense later. 4, I don't have any stake in you listening to me. For real, nothing is for sale. I'm not going to teach you to trade. People that teach people how to trade or run newsletters giving trading ideas make more money by selling their ideas than actually using them. They all have their own stories about why they're being so generous with their secret knowledge. But it's bull. Not that all this information is bad. It's just that you got to be careful you don't follow anyone blindly. Wait, so what are my incentives for writing this? Basically, he just wanted to write it and he hopes you like him. So, okay. 5, I'm not trying to convince you the world is ending and you need to buy gold immediately. I'm not talking shit about gold. I'm just, that's the most common one you tend to hear. So, okay, it's time for the meat and potatoes. Meat and potatoes, hi, you'll be eating liquid gold with the information I'm about to give you. Yes, you too can be a rich kid of Instagram. Just kidding, you probably won't do anything with it, and that's probably a good thing. Someone did, in fact, make $2 million off this information, though. For real, I watched it happen. Before we get to that story, we're going to go through some of the major pitfalls new and experienced traders fall into. That is some serious cash smuggling right there. I don't know. Is she hot? It's hard to tell underneath all the money. Yeah, maybe. Grab a drink of water here. Oh. All right. You can do a lot by avoiding bad as opposed to seeking good. So why start with what not to do? Because not smoking cigarettes is more healthy than eating all the organic food in the world. Because if you lose all your money, then trading becomes impossible, doesn't it? Do not use real money before you know what the hell you are doing. And again, he's just saying, start off paper trading, get a practice account. And I've spoken on this one before, and you probably know my stance on this one. Basically, I say, yes, you can start out paper trading, start out with a practice account, but largely just to learn how to use the exchange, how to set orders, how to set stop losses, how to exit trades and the like. And B, it can also be good if you are testing a specific strategy, if you're developing a strategy or a method. Ooh. And other than that, regardless, you are still going to have to, well, we'll get into that in a second, but you still have to trade with money and preferably do like a training account with real money too. But do not day trade without a system or method. If you're trading willy-nilly, you're going to lose. I don't even know exactly what willy-nilly means, but if you have to ask if your trading would fall under the willy-nilly category, then stop trading right effing now. You're not George Soros. Thank God for small graces. You don't have to trade on your gut. You don't need an algorithm running on a supercomputer, but you do need some sort of system that won't let you be an idiot. You will tell yourself you don't need a defense against being an idiot. This is you being delusional. Believe me, I betrayed myself too many times before committing to my systems. You don't win every time if you follow your methods, but you do a hell of a lot better. How do I create a system? So what makes a good system? We'll get into this more later as I show you the exact system that I used. For now, this will be helpful when thinking about how to approach your trading. And this is actually a very good little breakdown of exactly this. And that's kind of why I'm going through this just in the course of reading this article, even though it's not necessarily like a specific story, but it does tell what he was using. And it is very helpful. So, number 1, offense. It tells you exactly when and how to enter a trade. Maybe it's 3 of the 5 requirements must be met in order to go in. If 5 of 5 are met, you go in a little bit harder. This is one line of emotional defense. Very important. Trading will make you think that you can make $1 million today. This is very exciting. You will want to fudge the rules. Warren Buffett only broke his rules when he got bored. Notice when you're bored. If you think you could take advantage of more opportunities in the market, then alter your system, test it, and then implement it. Remember, no willy-nilly. 2. Defense. It tells you exactly how to exit a trade. This means stop losses. There are orders that automatically get you out of a trade when the market you're in hits a certain price. A common rule is to take 50% of your position, your money in the market, at a certain profit point, maybe 100%, maybe 68.2%, Fibonacci number that is popular. It also defines exactly how much of a loss you are willing to take on a certain trade. And it's basically like a fail-safe level. So this must be determined before you enter your trade. If you don't put a stop loss in your brain, you will justify your position over and over to you while you're hopeful the trade ends up... God, this is a terribly written sentence. Oh well, while your trade ends up losing your house. This is even more important than a strong offense. Don't go broke. Adding to a position. Sometimes you may want to make your position bigger as the market moves in your favor. You need to have a set of rules determining how you'll do that. Next, don't complicate it. Also very important. Every tool seems so powerful, so prophetic. Early on, I had a habit of adding signals that I would wrap up into my system. I would theory that they should make your trading better. Maybe it does for a Harvard physicist, but it didn't for me. The more complex I made my system, the worse I did over and over. I would start simple, screw it up by adding a bunch of things people recommended, then go back to the drawing board. The best method I ever used was dead simple, and that's the one we'll get into in a little bit. Give yourself a ton of room for failure. 8 out of 10 trades failed for me. That was fine because when I hit a winner, it won big. But if you're averaging 8 out of 10 trades failing, then it will be common to fail 20 times in a row. I've gone through streaks of 40 failed trades in a row. You've got to be able to survive those. My recommendation would be to risk 1% or less of the money you're willing to lose on each trade. That gives you 100 chances for failed trades before you go bust. It shouldn't happen. Of course, when I was 20, I was risking 10% on some trades, but if I went bust, it wasn't that big of a deal. And that's going to vary depending upon, how much you have in your account. And if you were risky enough to go and put money in there that you probably shouldn't be, let's say, gambling with. Pretend it's like going to the casino. It has to work. Again, test the damn thing. If it doesn't make fake money, then it certainly won't make real money. There is a time and a place for throwing caution to the wind and just going for it. Trading is the worst place for that kind of bullshit. The adrenaline that comes from the potential of losing thousands of dollars in a minute is enough. Your mission is to keep a cool head. And if you want to know more about that, go back and watch either of the trading psychology videos. I think one is Conquering Fear. The other is How to Not Suck at Trading. And I very much reiterate that point in both of those. So if you do this right, you have potential for making a lot of money faster than any other method out there. The potential, chances are it won't go that way. Chances are you will lose money, or you'll make money, feel like a god, trade like a god, and then lose all your money. When you put real money on the line, the game changes completely. You think you've tested your method, you've gone the first month, and everything looks solid. Great. Then you put money on the line, shit gets real. You can't seem to follow the system like you did in the test month, and the market seems totally foreign again. You don't believe me? That's fine. For you, it will be different. I don't know how many times I told myself that. I'm different. It doesn't matter, though. You'll feel it the same as I did. To save yourself some money, though, trust me, start small. And that is why I often iterate, just start with $100 in the account. Set up account specifically for just learning and training yourself It's only $100. Just write it off right from the beginning. Tell yourself, you know what? I plan on losing this $100, but this $100 is the amount I'm willing to pay to get better at trading. To think of it like going to the gym. You're paying for a gym membership. You are paying for that real world training experience. Do not enter trade when you are emotional. I told you I started meditating at 16. It's not because I was excited to being in the moment or that I was into Eastern philosophy. It was because if I didn't, I couldn't trade. I would mess it up. James Altucher talks about how he created algorithms for each of his methods and then let them trade for him while he was depressed and losing everything. I wasn't smart enough for this, and my methods inevitably had some level of subjectivity to them, and so I manually entered all my trades. James got to trade emotionally because he wasn't actually trading. If I got emotional, then I would get silly. You've got a system, so this shouldn't matter, but it so matters. Imagine this: you've just gone long on corn futures market for 2 contracts. You're up $5,000 on a trade in 2 hours. Awesome, right? Hell no. This is what happens in the 2 sides of your brain. 1, I want to take this $5,000 off the table because that's a great win. 2, yeah, but look at this pattern. I mean, it could be the big trade. It could be the one. You could be, up $100,000 if you add more to it. Yeah, but it's more important to conserve the capital. $5,000 is a great win. Maybe I could just take half off the table. Nah, dude, don't blow it. That's $50,000 instead. Fuck, the system says to sell now. Yeah, but the system isn't perfect. I mean, you made it anyways. You could change it. I know you can. Yeah, but the system, da-da-da-da-da-da. And then on and on and on. I said, imagine, but that exact inner dialogue is something I went through 20 times a day, every day for a long time. When I did make the right choice, the right choice being following the system, not just trying to make money. A lot of people make money with a shitty trade and then think that they have some special talent. And of course, they go bust within the quarter. I made the right choice when I let reason reign. When did I make the wrong choice? Well, when I was either excited or scared. Both fear and greed will destroy you. Immediate greed that overtakes your rational decision, which has longer-term greed in mind. I've said this earlier, but it's important to repeat. Some days you will feel like a worthless human being who has done and never will do anything worthwhile. You'll enter trades that aren't supposed to because you're afraid of missing out, FOMO. You will exit trades before you should because your stomach is weak. B, the next day you will make a winning trade and feel like a god of the market. You will forget whatever it felt like to lose, and you will make trades outside of your method. You will enter trades you shouldn't because you have the feeling that you can't do wrong. The market may validate you for a couple days and make the problem worse even. You will stay in trades too long because you know that the market will turn in your favor. No way you could possibly be wrong. Your trading decisions need to come from numbers and predetermined rules. After years of deliberate practice and success, you may actually get an intuitive feel for the market, then begin introducing those feelings into your systems. But before then, no way, Jose. Do not trade based on some purchase system or newsletter. Listen, if someone has a really kick-ass way to make money trading, they sell it to a hedge fund or use it themselves. They don't sell it to you for 5 easy payments of $300. And that's really not entirely true. At least, I mean, there's definitely, the scammy shit out there in crypto. God knows there's plenty of it. But there is good stuff out there too. So, discernment. But that being said, copycat. There are some decent newsletters out there, the James Dines letter being one of them. It may be worth signing up for a couple, but don't rely solely on them. Experiment with their information. Test their ideas against your method. Do not follow them blindly off the cliff. Think about the incentives at work. There is nothing in your favor. May the odds be ever in your favor. Do not get caught up in stories. Ironic considering the theme of this video, but whatever. If you see this image, run. Your system either works or it doesn't. People will devise elaborate narratives around their ideas that they want you to buy into. They will spend countless hours telling you about this thing and why it's the next tool to make you a millionaire. They will scare you by telling you you're going to miss out on the next big thing. They will tell you that you need them. You don't. You need a system that works. Incorporate their idea into your system if you believe in it and see if it actually works. If it doesn't, get rid of it. Do not trade. This isn't a joke. Most people should not trade. If you're not willing to give everything to the market, then it's not worth messing with. Do what Warren Buffett says and put your money in the S&P 500 index and go about your life, or invest in your own business. Of course, as terrible as trading is, it's also freaking awesome for the right people. To this day, I get a warm, fuzzy feeling when I see a price chart. I am not joking. I feel at home and I see patterns and I get the urge to dive on in. For real, you should only trade if you are extremely drawn to it and you can behave rationally, while still remaining delusional, because let's face it, we all want to be millionaires or more. And here he gets into his trading method. I'm going to tell this little story here at first, and then I'll just kind of summarize it. But I was on break before going into my junior year of college. I was trading, doing pretty well. I was having a particularly good morning when I received a picture message on my phone. It was a screenshot of my partner's trading account. A couple weeks prior, I received one that said 250,000. He had started with 30K only a few weeks before. I was freaking amazed. This particular day, though, I didn't believe it was real. The image read $2 million and change or whatever. That was definitely a holy moly moment, to say the least. I stared at it for a long time. I texted him back, "Dude, this isn't real." "Oh, yes, it is." How did that happen? How did he turn 30K into 2 million in 3 months? Well, the method below. But also, and this is a massively important but, he was more balls to the wall than anyone I'd seen anywhere before. Every bit of profit was immediately thrown back into the trade, so his position ballooned like crazy. I actually used the term stapled to the wall. He was insanely lucky. See that lumber futures price chart below? See that massive move down? Yeah, he got that at the top and rode it straight to the bottom. And 3, he does have mental powers. Okay. This combination ended up with massive losses in the next couple months, though. He still ended with an awesome 5-month return, but you were a millionaire for a month and then not. Well, it hurts. I used this method with my balls about a foot off the wall and made great returns. I nearly doubled my personal account in 6 months and then was able to raise money from investors with that track record. Note, this method is specifically useful for commodities futures, but can be applied more widely with certain modifications. Here's what he looked for. So basically he was looking for, and this is like long-term charts. We're talking like weekly to monthly to yearly charts. And he's looking for major tops and bottoms. And there is some correlation with the crypto market with this. And, particularly when dealing with, major market tops and bottoms. So, bull market tops or bear market bottoms. And those absolutely are the absolute best times to get in or to trade. Especially whether you're investing or trading. Because, if you're trying to buy for some hodl positions, catching around the bottom of the bear market, that's where the real money's made. Like they say, when there's blood in the streets, buy Bitcoin. I see a lot of blood there. I see a lot of blood there. That might not be the exact phrase, but That's what I'm sticking with. But, you know, also just keep in mind, I mean, okay, this is a Bitcoin chart. You know, if you were to go long, you know, down here at the bottom, money flow is coming back up, and you let it ride throughout that little, you know, bull market uptrend right there, 250%. You know, even if you were only 3x'd, you're talking 750%. So, you know, there are definitely some, I don't know, what the fuck, brain fart. There's some credence to, you know, the little strategy he's got going here, but he's particularly just flipping through tons and tons of charts, looking for macro tops or bottoms. And then he's looking for reversals, you know, at that potential bottom. And real quick, I'll go through some of these. They're just little candlestick patterns. We have the hammer candlestick where you got your little your handle there, and then your mallet, your little hammer head up here. Then you got, you know, bullish, bearish. And that is often a sign of reversal. You got your morning doji star, which kind of looks like a little plus where you don't even really get any candle body. And you come down, you know, you come all the way down, maybe you come back up, kind of meet in the middle, and then click over to the next one. Here is an abandoned baby. I've honestly never heard of this one before, but looks kind of like, you know, we got this gap in between here where it looks a little separated from those two. But it says, keep in mind, we want these patterns at a multi-year high or low, preferably with a gap. That means for the chart above, we would want the price to open below where it's current. This part's kind of irrelevant for us. You know, again, just looking for multi-year low, essentially just to go long, and then to try to figure out, in this case, because he's doing commodities, trying to figure out when General Mills is about to make some, you know, big purchases on the wheat market or the soy market, and try to time it with the reversal. You know, okay, that doesn't really apply to us for that much, but this one, I'm not even going to read that. That's dangerous. Stop losses. So you need to set a stop loss immediately after entering your position. I would give different markets different leeway depending on how widely they fluctuate. The most important thing is that you set a stop loss with a loss that you can manage. It doesn't matter how perfect the setup might appear, it could still turn on you. It could still lose you money. You need to be prepared to take losses. Absolutely, it's going to happen. Ideally, your stop loss is below the previous low. Sometimes you won't be able to catch it that close, but if you can, you're golden, pony boy. And like he is talking about, let's come back down to a smaller one here. So, you know, say you entered a trade like here. Actually, that's a bad example. Let's say, you know, you're coming up. Okay. Get in over here, kind of coming up, starting to go sideways. But before, as soon as you set that entry, you know, you're setting your stop loss. Maybe you set it below this swing low. And then as it's, well, let me come back to this, and I think he explains it too. Managing the trade. So let's say we got long on soybeans and we've got our stop loss right under the previous low. Version 1, the market moves against us, takes out our stop. This is the most common scenario. Version 2, this is the more interesting version. The market moves in our favor. Yeehaw. We're not out of the woods yet, though. Obviously, we would love the market to take off in the direction of our trade and lead us to our fortune. If this happens, then count your blessings and remember the feeling, because it won't come often. But even when we get a winning trade, we have to work with it. It will go up a while, then pull back, then go up, and then pull down. When we talk about managing a trade, we're really talking about three things. Adding to the position. Talked about this a little earlier. Essentially, you can add to a position that's working to double down. Say you get a strong movement in your favor, then it pulls back a bit to consolidate. You can add to that position. 2, adjusting our stop loss. This is the one that you will use most often, as in every single winning trade. I like to move my stop loss to my entry price as soon as possible, break even point. This means that if a market moves against you, then you still don't lose any money. I will normally wait until there is a new solid level of support created and then move the stop loss up to this level. So let's say, we're coming up, pump up a little bit, and then we're kind of going sideways for a second, and then kind of going up, but we're generally kind of consolidating over in this area here. Then we start coming back up. At that point, you might move your stop loss even as you first get up here, maybe, but you move your stop loss up here, or at minimum, once you start breaking out to the upside, set it just above your entry price. Because if you do hit your stop loss, remember that's a market sell order, so you're going to get a little bit more on the fees rather than if you had done like a limit order to close the trade. So set it a little bit above, that way, because if you set it at the exact same price, you'll actually come out losing just a tiny bit, and nobody wants to see a red or a negative trade on your trade history. So set it a little bit above, but then okay, we're coming up. Oh, and then now we're starting to pump. We're coming up here at this point. You come up, now we're starting to consolidate a little bit again. Move your stop loss up here. That way, worst case, even if it does turn right back around, you're closing with that guaranteed profit. Three, reducing our position, taking money off the table or taking profits. I alternated between taking 50% of my trade off the table when I had 100% and never reducing a trade unless I got out completely. So, alternating between those two. Often taking 50 or 30% at a certain point is a good way to lock in the profits. The only problem is that it limits your upsides. So, if you reach a certain point and you take 50% off the trade, and then it continues to the upside, you're not going to gain as much money per percentage point beyond that, because you are now playing with a smaller trade. But, it can have its merits, especially, we'll do this one again here. So let's say that, we're going up, we're pumping, now we're kind of going sideways, and you're thinking, okay, we're not sure what it's going to do at this point. It may start coming back down, but you don't want to completely exit the trade. So let's say, you got your stop loss below this little low right here. And let's say, you take your profits off and it's going up and it's coming back, and you just kind of let it ride at that point. You're like, all right, regardless, I've already taken profits. I've locked it in. It's realized profit. And I've got my stop loss up here. So, worst case scenario, trade's going to cut right there, end in the green. Everybody's happy. But on the off chance that it does continue up, maybe it does continue up. And at that point you say, oh shit, okay, hit it with a limit close while it's up there. And, you at least gained a little bit more profit. Now, it won't be the same as this move right here because you've taken 50% of the position away. But you still added more to it, and more is better. And then exiting at certain reversal patterns, I would exit a trade and not wait for it to hit a stop loss. Again, like I was kind of saying with the, closing with the limit order. And if you are, if you're in this trade and you're kind of coming up and you see, okay, we're starting to turn around, money flow's coming down. VWAP just kind of crossed over into the negative. RSIs are pointing down. Rather than waiting it out to see if it's going to hit your stop loss, you can just cut it up here. Worst case scenario, you can always re-enter. But at this point, you're saving that much profit right there that you potentially would have given right back if you let it go to the stop loss. Now, I will say this. You are absolutely going to have times where you see it coming down and it's looking sketchy and you cut it, and then the MFer turns around on you and starts going back up again. But even if it does do that, just remember, you ended the trade in the green. it was a good trade. You're not always going to get the absolute perfect entry and the absolute perfect exit. You know, it's always nice to strive for perfection and to try to be precise, but, you know, keep in mind, it's not going to be your last trade ever, but in that moment, while you were in it, that's the one trade you want to focus on. And, you know, even if you get it close up here and close entry down here, that's a good trade. I mean, this right here, 4.6%. You know, and then whatever margin you got going with it. But that's it. That's basically this little article. Look at that. I did it faster than last time. Yeah, I may have actually recorded this entire freaking video and I forgot to turn the screen share on, and I literally did the whole thing with the intro screen. So I absolutely give you permission to digitally smack me upside my head because that was fucking stupid. Oh, I can't believe I did that still. But let's look at the charts. Let's see what's going on here. I was going to split it up into like that little video plus an analysis video, but frankly, since this is already the second damn time, I don't care. We're going to just, let's go. Let's run with it. Let's see what we got. So we are going sideways on a Friday. Just seems to be the case a lot lately. Fridays are sideways. Going into the weekend, we shall see if, you know, last weekend we did get a little bit of action, so heads up on that one. It'd be nice if we could see a little bit again. You know, we've kind of got this downtrend going there. A little bit of downtrend going there. Money flow looking down. Now the RSI, you know, it came up and we're pointed down just in the immediate short term at least. Generally overall, it does kind of have a downward slope to it. But even this, you know, last time as we were coming down, we got a gigantic split. So it still has upward pressure. You know, we're still holding this range, this support and resistance level right there. So I would definitely keep an eye out for potentially breaking out or breaking down. At the moment, you know, I might be leaning a little bit more toward down, but that is a lot of bullish pressure after just going through a big pump. So, I mean, this could basically just be the, you know, the equivalent of our pullback before continuing up, and it's just enough bullish pressure that the pullback really just only went sideways instead of, you know, going down. So that's, let's see if we come up, let's go on the daily. I haven't been on the daily in a minute. So we have, you know, we came back to our spider line. We got 17, 11, 11. Been riding along this fan line right there. Let's see, down here, money flow just finally came into the green over here on the daily. VWAP got a little bit more time up above, so we're still in the positive on the VWAP. RSI pointing up. Looks like we had a little bit of split there. Almost looks like maybe it started angling back together. Either that or just consistently spread, which we have been lately. And again, sign of weakness, and honestly fairly reasonable because the whole market's just been acting weak lately, especially in this area. Oh boy. Let's see. Come on. You know, we do have a little potential pattern going on here. At the very least, you know, we are squeezing into a bit of a volume price crunch without a lot of space left. Again, this isn't super accurate or anything, but you know, potential breakout probably around this outer ring right here, sometime in that time range. Let's take a look. What's Ethereum doing now? Ethereum getting a little bit of a pump. Now, this is one thing I noticed today. Potentially had a breakout. And part of the reason I say that is we were getting a decent little chunk of volume right as we were breaking to the upside. And what they say, you know, it's not a breakout if you don't get volume. And this is definitely a strong trend line. Now, at this point, I'd be looking for a support bounce. You know, come back and confirm the breakout. Turn that resistance into support. And we'd be off and on our way. Money flow is kind of curving back down. VWAP, you know, it's not super strong to the downside. It's largely sideways, but it is below there. RSI could possibly be arcing back over, but it's still generally up high. It even, you know, it even starting to curve itself sideways. So I'm definitely not ruling out, you know, an upward continuation. I'm just saying that I would like to see this come back and recheck it. The one thing I don't want to see, though, is a fake out, come back down into the pattern. Oh, let's see, 4 hour. Yep, money flow. Was coming up. We're kind of pulling back a tiny bit. That's early to call that anything other than that. You know, RSI still looking good. Coming up with a 15 on the bearish side. So, yeah, at the very least, we're having some consolidation. Not quite enough to call that a divergence. This one is lower than that, but if you look here, you will see that, like our other video the other day, we do have a little money flow divergence. So we'll see. So far, it has only really played out as sideways action. But we'll see if we can get anything more out of that. Looks like potentially getting a bounce back to the negative side on the VWAP here on the 30-minute. Coming back into a red candle, 12 on top. We'll see if we do push down and got rejected from another, you know, spike to the upside. Could be a sign of rolling over the top. We got 1, 2, 3. I hesitate to call that a fourth impulse wave, but it could be. Yeah, so not too much going on at the moment. We'll see what it does through the night, and we'll check up on it tomorrow. But let me know what you guys think. Do you like the idea? You want to hear some stories? I've got another one, though, that is a better actual story. This one's kind of just an icebreaker where we're getting in, and the guy actually went through a lot of very important, you know, golden rules for beginners, if you will. So let me know what you think, and I'll see y'all tomorrow. Have a wonderful day, evening, morning, life, afterlife. Yeah, wherever you're at, wherever you're going. Peace.